Let's go back now to one of our top stories. That's in the UK, where the Bank of England has cut interest rates to 0.25%. With more on this, Sarah Morice joins us live from London. Sarah, the Bank of England toyed with this idea last month but didn't go through with it. So why have they done it now?
Well, the economy here has got just a little bit worse in the last month. We have seen factory activity go down. Unemployment is set to get worse. It's currently sitting at around 4.9% and it's expected to hit 5.5%. And also the growth forecast has been slashed. But I might point out there, while it is expected to slow down in terms of growth, the bank is not expecting the UK to slip into recession. Nonetheless, they did decide to take this decision to drop the interest rates, and it really all comes down to Brexit. And of course, we heard a lot of economists warning pre and post Brexit that there would be a lot of economic slowdown as a result of that decision. Well, the Bank of England has come out today and said that is exactly what they're expecting to happen. They're expecting short to medium term pain in this country, and that's why they needed to move today. Now, the decision was unanimous. There's around 9 people on the board who decide about these interest rates, and all of them agreed that the interest rate did need to be dropped. They're a little bit more split when it came to the idea of quantitative easing, and of course they are willing, they're now announcing they will buy bonds to try and also help stimulate the economy and also provide a funding fee or funding bank of money for the banks to help them to afford this interest rate cut. And also the Bank of England is saying that it could possibly drop rates even further next month or in the months to come if it needs to do that, although the governor of the Bank of England has announced that he really is not into negative interest rates. So perhaps we won't see England's interest rates drop down to that below 0% mark as some other countries have.
It's obviously good news for borrowers and bad news for savers. What is this stimulus package really hoping to achieve, and is there any sign that it will be successful?
Well, that question, will it be successful, I think is probably the million-dollar question. The bank said it really did need to act quickly and decisively rather than perhaps have to play catch-ups later. So it's really hoping that this will stimulate the economy. And there is some concern, though, that perhaps it won't stimulate the economy because interest rates are now really so low. It really could cut into the bank's margins if they do pass on these interest rate cuts. However, as I mentioned, there's $100 billion that has now been put into a fund for the banks so that they can be encouraged to drop these rates. And the Bank of England is saying really there's no excuse for the bank not to pass on these interest rates. But we've seen it before with the banks where they choose themselves not to pass that on. So that's certainly not unprecedented. So it'll be certainly a wait and watch situation here.
OK, Sarah Morice there in London. Thank you very much.